Imagine waking up one morning to find that the US dollar, once the bedrock of the global economy, has lost its reserve status. Your bank account is drained, your investments are worthless, and panic spreads like wildfire. Overnight, gas prices skyrocket, grocery store shelves are empty, and riots erupt across the country. It sounds like a doomsday scenario, but how far-fetched is it really? Could the dollar's downfall happen sooner than we think? And what would that mean for you, for your family, and for the entire world? Today, we're diving deep into a scenario that most Americans never see coming: the collapse of the US dollar as the world's reserve currency. The story of the US dollar's rise to global dominance is one of power, opportunity, and a bit of luck. Before World War II, the British pound was the world's reserve currency, but years of war left Britain financially crippled. In 1944, as the war neared its end, leaders from 44 nations gathered at the Bretton Woods Conference in New Hampshire. They needed a new financial order to rebuild the world, and the US, untouched by the destruction, had the strongest economy and the largest gold reserves. The result was the Bretton Woods Agreement, which established the US dollar, backed by gold, as the world's reserve currency. Under this system, other countries pegged their currencies to the dollar, which was convertible to gold at $35 an ounce. This arrangement gave the US enormous power. By controlling the dollar, Washington could influence global trade and finance, and it didn't take long to capitalize on that power. The dollar became synonymous with stability, and nations worldwide began stockpiling it as a safeguard. But the real game-changer came in 1971. Faced with mounting debts from the Vietnam War and rising inflation, President Richard Nixon shocked the world by ending the dollar's convertibility to gold. Overnight, the dollar became a fiat currency, backed by nothing but trust in the US government. To stabilize the dollar's new status, Washington struck a deal with Saudi Arabia and other oil-rich nations, creating the Petrodollar system. In exchange for US military protection, these countries agreed to sell oil exclusively in dollars, forcing every nation to hold and trade in the American currency. This move not only secured demand for the dollar, but also cemented its dominance for decades to come. As global trade expanded, so did the need for dollars, making it the undisputed king of the financial world. However, this supremacy was built on a delicate balance of power and trust, one that's now starting to crack. Today, that balance is teetering on the edge. The U.S. national debt has ballooned to over $31 trillion, a figure so immense that most Americans can't even fathom what it means. To put it into perspective, if you stacked $1 bills, you could reach the moon and back nearly 5 times. But the real problem isn't just the size of the debt, it's the pace at which it's growing. Every year, the government spends far more than it earns, borrowing trillions to cover the difference. To finance this debt, the Federal Reserve has been printing money at an unprecedented rate, expanding its balance sheet to nearly $9 trillion. This influx of dollars has artificially propped up stock markets and fueled a spending spree, creating an illusion of prosperity. But this strategy comes with a dangerous side effect: inflation. As more dollars flood the market, the purchasing power of each one erodes, making everything, from gas to groceries, more expensive. The average American feels this squeeze daily, but few realize just how close we are to the edge. And it's not just domestic concerns. Foreign countries, particularly China and Japan, hold over $1 trillion each in U.S. Treasury bonds. For years, these nations saw American debt as a safe investment, a stable way to park their excess dollars. But as U.S. debt spirals out of control, their confidence is waning. If China were to dump its U.S. debt holdings, a move often hinted at during times of tension, the consequences would be catastrophic. Bond prices would collapse, interest rates would soar, and the dollar's status as the world's reserve currency would be under immediate threat. The growing debt isn't just an economic issue, it's a national security risk. The more America borrows, the more it relies on adversaries to finance its spending. This isn't just a financial problem, it's a geopolitical ticking time bomb. And if investors worldwide lose faith in Washington's ability to manage its debt, the sell-off could make 2008 look like a mild downturn. The petrodollar system has been the cornerstone of the dollar's dominance for decades. By ensuring that oil, the lifeblood of the global economy, could only be traded in US dollars, Washington created a permanent demand for its currency. Every country that wanted to buy oil needed dollars first, forcing them to hold vast reserves of greenbacks. This demand allowed the U.S. to print money with relative impunity, funding military operations, social programs, and a lifestyle that most Americans take for granted. But that cornerstone is beginning to crumble. In recent years, Saudi Arabia, the linchpin of the petrodollar system, has started exploring alternatives. Faced with a shifting geopolitical landscape and growing partnerships with China and Russia, Riyadh has hinted at accepting other currencies for oil sales, especially the Chinese yuan. In 2022, China imported more oil than any other country on the planet, and it has been aggressively pushing for oil contracts priced in its own currency. If Saudi Arabia agrees, it would send shockwaves through the global financial system, undermining the petrodollar and, by extension, the US dollar itself. Russia has already taken steps in this direction, selling oil to China and India in non-dollar currencies, and Iran has long bypassed the dollar due to US sanctions. Even the European Union has flirted with the idea of purchasing energy in euros instead of dollars, especially after the energy crises that followed geopolitical tensions with Russia. If the petrodollar collapses, the consequences would be immediate and brutal. Demand for the dollar would plummet, causing its value to nosedive. The U.S. would face skyrocketing inflation, a bond market in chaos, and a wave of panic selling that could dwarf the Great Recession. Worse, the government's ability to finance its debt would be severely crippled. Without the constant flow of foreign dollars, Washington would either have to slash spending dramatically, risking social unrest, or print money at an even more reckless pace, triggering hyperinflation. The petrodollar's collapse wouldn't just impact the U.S. It would ripple across the globe, destabilizing markets and economies that depend on the dollar for trade. But for America, the fallout would be existential, challenging not just its economic power, but its very role as the leader of the free world. While most Americans go about their daily lives unaware, a silent revolution is underway. It's called de-dollarization, and it's gaining momentum fast. For decades, countries around the world have resented the dollar's dominance and America's ability to use it as a geopolitical weapon. The more Washington wielded the dollar to impose sanctions and control international finance, the more determined its rivals became to break free. Leading this revolution are China and Russia. Over the past decade, they've been amassing gold reserves at an unprecedented rate. China, the world's largest gold producer, has also been its biggest buyer, quietly building a financial firewall against a potential dollar collapse. At the same time, both countries have been pushing to replace the dollar in international trade. China has signed currency swap agreements with over 60 countries, allowing them to trade directly in yuan without using the dollar as an intermediary. Russia has been conducting oil sales to China in ruble-yuan deals, bypassing the dollar entirely. The creation of alternative financial systems has also accelerated. In 2015, Russia launched the System for Transfer of Financial Messages, SPFS, as an alternative to SWIFT, the international payment system that Washington has repeatedly used to isolate its enemies. China followed suit with its Cross-Border Interbank Payment System, EIPS, designed to facilitate yuan-based transactions globally. These systems might not yet rival SWIFT in reach, but they represent a clear intent to build a financial world where the dollar is no longer king. The most ambitious challenge yet comes from the BRICS alliance: Brazil, Russia, India, China, and South Africa. Together, these nations account for over 40% of the world's population and nearly a quarter of global GDP. They've openly discussed creating a new reserve currency backed by a basket of commodities like gold, oil, and rare earth metals. Such a move would strike at the heart of the dollar's dominance, offering countries an alternative that's not tied to U.S. interests or policies. For the first time in decades, the world is seriously contemplating a post-dollar era. If de-dollarization gains enough momentum, the impact on the U.S. economy would be catastrophic. Foreign nations would dump their dollar reserves, causing its value to collapse. The cost of imports, from electronics to energy, would soar, triggering inflation that would devour the average American's paycheck. And as trust in the dollar eroded, so would America's ability to project power abroad. The revolution might be silent for now, but its consequences will be deafening. Imagine this. It's a Monday morning. You grab your phone, open your banking app, and see a message that makes your heart stop. Service temporarily unavailable. You switch on the news, markets are crashing, ATMs are empty, and gas stations are swamped. Panic spreads as the reality sinks in. The dollar has lost its reserve status. What happens next would make 2008 look like a hiccup. Within hours, foreign countries start dumping their dollar reserves, triggering a massive sell-off in bond markets. The value of the dollar plummets, pushing up the cost of everything, from food to fuel, practically overnight. Americans rush to withdraw cash, but banks, already overwhelmed, impose withdrawal limits to prevent collapse. In a desperate attempt to stop the bleeding, the Federal Reserve announces emergency measures, including massive interest rate hikes. But it's too late. The stock market enters freefall, wiping out trillions in retirement accounts and pensions. Companies that rely on imports face ruin as the cost of foreign goods skyrockets. Grocery store shelves empty within hours, and fights break out over basics like water and bread. Gas stations run dry as oil prices surge. Nations no longer want dollars for payment. In less than 24 hours, life as most Americans know it has been turned upside down. The chaos isn't limited to the U.S. The world, built on the dollar's foundation, is thrown into disarray. Countries scramble to stabilize their own currencies, triggering a global financial panic. Trade grinds to a halt, and the IMF calls for emergency meetings. The dollar's fall is no longer just an American crisis, it's a global one. And this is only the beginning. As the dust settles, a grim reality emerges. The U.S. is no longer the center of the financial universe. Without its reserve currency status, Washington's ability to fund its massive military budget evaporates. Military bases worldwide are shut down. Allies begin to question defense agreements, and China seizes the moment, expanding its influence in Asia, Africa, and even Latin America. The yuan, backed by gold and growing international adoption, becomes the de facto global currency. At home, the U.S. faces an economic depression unlike anything seen before. Unemployment soars into double digits as businesses, cut off from affordable credit, shut their doors for good. The government, drowning in debt it can no longer print money to finance, is forced to impose brutal austerity measures, slashing Social Security, Medicare, and defense spending. Protests erupt nationwide, turning cities into battlegrounds. Political leaders, desperate to restore order, float the idea of a new currency backed by gold or even a central bank digital currency, CBDC. But trust is shattered. No one believes Washington can manage any currency responsibly. Meanwhile, the world moves on. The BRICS alliance, capitalizing on the chaos, unveils a new reserve currency backed by a basket of commodities. Trade deals are rewritten, and countries that once depended on the U.S. pivot to China and Russia. The International Monetary Fund, IMF, seeing no other option, endorses this new system, signaling the official end of the dollar's reign. The loss isn't just financial, it's cultural. Hollywood, once the epicenter of global influence, sees its power wane as China's media industry takes over. Even Silicon Valley isn't immune. Tech giants, crippled by inflation and shrinking markets, lay off tens of thousands. In the blink of an eye, the American century is over, replaced by a new world order where the U.S. is just another nation struggling to stay afloat. With the dollar's collapse wreaking havoc at home and abroad, the question isn't just how it happened, but whether there's a way to stop the bleeding. Washington's options are limited, and none of them are pretty. Some policymakers advocate for a return to the gold standard, arguing that backing the dollar with gold would restore confidence. But with only about 8,000 tons of gold in its reserves, the U.S. would need to massively devalue the dollar to make such a move viable. The result? Overnight, Americans would see their savings slashed by half or more, triggering outrage and likely riots. Others push for a more futuristic solution, a central bank digital currency, CBDC. By creating a digital dollar, the Federal Reserve could exert tighter control over the money supply, tracking every transaction and potentially imposing negative interest rates to force people to spend. But this kind of financial surveillance raises red flags about privacy and civil liberties. Many Americans, already distrustful of the government's handling of the dollar, would see a CBDC as an Orwellian power grab, sparking a wave of resistance. In the private sector, tech visionaries propose a third option: a dollar backed by Bitcoin or a basket of cryptocurrencies. They argue that blockchain technology's transparency could restore trust where Washington has failed. But the idea of tying a national currency to assets as volatile as crypto seems like trading one crisis for another. And with China and Russia already moving to ban or heavily regulate cryptocurrencies, a digital dollar might find itself isolated on the global stage. As Washington flounders, states begin to take matters into their own hands. Texas and Florida pass laws allowing taxes to be paid in gold and silver, while others look to adopt state-backed digital currencies. The U.S. risks fragmenting into a collection of semi-independent economies, each with its own version of money. The bitter irony is clear. In trying to save the dollar, America might end up tearing itself apart. With each option carrying its own risks, one thing becomes clear: there's no easy way out. The American empire, like so many before it, may be facing a fall that's no longer avoidable, only manageable. Throughout history, every empire has believed its currency would last forever, right up until the moment it didn't. In the 19th century, the British pound reigned supreme, underpinning a global empire that spanned continents. But 2 world wars and a mountain of debt brought Britain to its knees, forcing it to hand the financial crown to the United States. Even the mighty Roman denarius, once the world's most trusted currency, was debased into worthlessness by reckless spending and endless wars. The signs of decay are disturbingly familiar. Just like Rome, the U.S. has stretched itself thin, financing endless wars and trillion-dollar stimulus packages with money it doesn't have. The national debt now exceeds 120% of GDP, levels not seen since World War II. Economists warn that once debt crosses 100% of GDP, growth slows and a debt crisis becomes inevitable. If history is any guide, America is sprinting down a well-worn path to collapse. Meanwhile, adversaries are learning from history too. China's Belt and Road Initiative is reminiscent of the trade networks that once tied the world to the British pound. By financing infrastructure across Asia, Africa, and even Europe, Beijing is building a parallel financial system that could one day replace the dollar-centric order. Russia's massive gold reserves echo Napoleon's dictum that gold has no nationality. And the BRICS alliance's push for a commodity-backed currency looks a lot like a modern twist on the gold standard. The lesson from history is brutal but clear. No empire, no matter how powerful, can outrun the consequences of unsustainable debt and military overreach. For the U.S., the question isn't if the dollar will lose its reserve status. It's when and how violently. The fall won't just be financial. It will redefine the global order, forcing Americans to confront a reality in which they are no longer at the center of the world. The 21st century may belong to China, Russia, or a coalition of nations determined to end the dollar's reign. And when the dust settles, history will record it not as an accident, but as an inevitability, a fate sealed by decades of decisions that prioritized short-term gains over long-term stability. So, what do you think? Is the fall of the US dollar inevitable? Or is it just another doomsday theory? Let us know your thoughts in the comments below. If you found this video eye-opening, make sure to like, subscribe, and hit the notification bell so you never miss our deep dives into the hidden truths about money and power. After all, sometimes the right question can change everything. This is What Would Happen If, and we'll see you next time.